Well, good morning or good afternoon, everyone, depending on which part of the country you're in. I'm Troy Eckard. I'm the CEO and manager of Eckard Enterprises and Eckard Land and Acquisition. I have today with me Brittany Melville, who is Director in Marketing and Sales with Next Generation. Brittany and I have met each other on Zoom about 18 months ago. We've done previous presentations, and what we want to do today is just take our time. We're going to have this recorded. We know some of the guests will come in a little bit later. Many of the guests will be looking at this as a recorded version at a later time, more convenient. So our entire goal and effort this morning is to want to share with you the advantages of a self-directed IRA, give you the advantages of working with a professional company like Next Generation, and to allow Brittany and myself kind of talk about some of the things that are changing place in the marketplace and how certain assets and certain valuable characteristics of a self-directed IRA can be really beneficial to investors who are doing long-term planning, trying to avoid those taxes, and also create wealth, and doing it inside of a really, really unique but very advantageous vehicle like a self-directed IRA. Brittany, good seeing you again. Thank you for joining me this morning, and I'd like to give you the chance to take over to explain what goes on in Next Generation and kind of just set the tone for the audience, and then I'll jump in after you, and then we'll save the last 10 or 15 minutes to be able to let the audience share some questions with us.
That sounds great. Thanks, Troy. Always good to see you. And thanks again for the opportunity to share some education together with the community. Happy Tuesday, everyone. I'm Brittany Melville, and I will be focusing on the portion of our conversation today as it relates to self-directed IRAs. And today our more specific focus is hedging inflation. Obviously, we all know that's been a hot topic and we've all been impacted by that. So we'll talk a little bit about that and how it can tie into some particular and unique investments and present some tax advantages to you. So we'll just dive right in. I do have to share a quick disclaimer, and this also ties into confirming our role as an organization as it relates to self-directed IRAs. So just to clarify, we're not financial advisors. We're not fiduciaries. However, all the information that we provide is for educational purposes today. And if you are in need of additional guidance or advice, you may want to consult with a tax or a legal professional, depending on the complexities of your situation and your investment. However, to clarify, as a self-directed IRA company, we are a custodian, which means that we're a financial institution, we're regulated, and we do a focus on holding IRAs for individual investors. We also do tax reporting and record keeping on these accounts. And then, of course, like we're doing today, provide lots of education and then do all the administration and provide customer service as investors are going through the process. So if you're new to a self-directed IRA, you can lean on your self-directed IRA provider for guidance through what to do, what not to do, how to get started, and we'll talk a little bit about that today as well. So first, it's no surprise to any of us that we are in an inflationary period. So the U.S. inflation rate has reached 7.5%, which has outpaced projections and is at its highest since 1982. Obviously, we know too that that's tied to soaring energy costs, labor shortages, supply disruptions. We've all experienced and been impacted by these things. And while that might not paint a very pretty picture, there are some things to be aware of that can have potential benefit or focus to look at on the bright side during these types of periods. As you can see here, that commodities and other products with cash flow that kind of ebbs and flows tend to fare better during inflationary periods. When purchasing power declines, assets like real estate, which you can see here, and natural resources, which you can see here, tend to hold their value. So that's important to know, and many even become more valuable as they become harder to afford. So holding these assets one way or another, but especially in an IRA or any type of qualified account or retirement vehicle, can allow you to defer or completely eliminate paying tax on any earnings from these investments. So as these gain value or hold their value over time, by holding them in a retirement account, you can potentially accelerate your wealth building for future retirement savings and take advantage of the conditions that we're in to focus on these particular types of asset classes. For anyone that's not familiar with self-directed IRAs, a self-directed IRA itself is essentially one that opens up your allowable investment. So traditionally, we always think of IRAs as allowing us to invest in the stock market. We're usually tied to stocks, bonds, mutual funds, et cetera. And we don't typically think of holding things like real estate and natural resources in an IRA because typically large firms don't market that, and we've been told that they can't do it. However, specialized companies like Next Generation focus just on holding non-public assets in retirement accounts. And a self-directed IRA will allow you to do that. If you open one with a self-directed IRA firm, it will also allow you to seek your own investments. So you have a little bit more freedom and flexibility there to kind of invest in the things that you might feel really good about, things that you might feel passionate about, maybe you might have a little bit more control over. It's also going to afford you, as we're going to talk about today, hedge against potentially inflation, against market volatility, which we've seen a lot of in the past couple of years. And then, of course, again, it's going to come with some tax advantages that you wouldn't otherwise have if you were just using personal funds to make these types of investments. So just to kind of paint a picture, there's a whole world of possibility outside the realm of public securities. So possible investments in a self-directed IRA, of course, we talked about real estate, and even within that category, there are tons of things that you can do in terms of holding, raw land, rental properties, fixing and flipping property, can be residential, can be multifamily. Less direct investments could be things like private REITs, syndications, that sort of thing. And then, of course, other private equity type investments, hedge funds, even cryptocurrency, which there are a lot of eyes on that right now, of course, private lending. And then today we're going to talk a little bit more about natural resources, the natural resources side of things. The only two exceptions that the IRS holds that you cannot have in a self-directed IRA are life insurance and antiques or collectibles. So just about anything else that's not publicly traded outside of those two restrictions is game for consideration when we look at self-directed IRA investments. So a lot of times we get the question then, okay, how does this work exactly? If I wanted to do this, what are the mechanics? And how does it work so that I'm not having to pay penalties or taxes on what I make through my investment? So essentially, when you open and fund a self-directed IRA, you as the account holder work directly with that self-directed IRA company, that custodian, to direct them to make a specific type of investment. So let's say you want to invest in ABC company for $50,000. I'm just making this up for simplicity's sake. You would direct the custodian to take $50,000 out of your IRA and put it directly into ABC company. You would provide them, of course, with some documentation that shows the terms of the investment, but the funds never come into your hands. They go directly from your account to the entity. And then when you're paid back, let's say in this case, you're getting dividends paid back to you on some sort of frequency. Those are paid back directly to your IRA, into the name of your IRA, and the custodian will take that payment and deposit it into your account. So it's a closed loop system. Of course, everything associated with the investment flows to and from the account, and that's what enables you to not technically take a withdrawal in order to make these types of investments. So you still have the control over what you're doing with the funds, but you're using a custodian as sort of like an intermediary here that is documenting everything for tax purposes and making sure that things are going through the proper channels. And then, of course, when you earn a return back and you get cash back into that self-directed IRA, you have a choice, again, whether you want to reinvest that cash into the existing investment you have and just further fund that investment, look for a new deal and make an additional investment. You can hold as many investments as you want in one self-directed IRA. Or if you're a retirement age and you say, I want to take some money out for personal use and, retire and start doing other things, you are, of course, free to take a distribution out of that self-directed IRA. So the steps to set one up, essentially you have to, of course, start by opening a self-directed IRA. So you can have a traditional, a Roth. If you're a business owner, you can have a SEP, simple. You can even have if you are a business owner and you have a qualified plan like a 401k, and you want to expand that existing plan to include these additional investments, you can potentially do that. So there's a lot of flexibility with respect to account types and the same types of advantages that would normally apply to those different types. You would open an account by just completing some paperwork. It's all electronic. In terms of funding the account, that's another big question we get. So typically, if you have an IRA in another institution that won't allow these types of investments, for example, you can facilitate a transfer directly from that institution from your existing IRA to your self-directed IRA. If they're similar account types, like a Roth at Fidelity, for example, and then a self-directed Roth you're going to open, then it is a trustee-to-trustee transfer. There's no penalty, there's no tax reporting or anything on that, and you can do as many transfers as you'd like. If you have a 401k with an old employer, for example, and it's eligible to do a rollover, you can roll over your old 401k funds that maybe you're just sitting there not doing anything into a self-directed IRA and start actively investing them. You work with your custodian in order to do that funding process as well. And then, of course, lastly, like I described earlier, you're going to make an investment, so you're going to choose one. You don't necessarily have to have one picked out when you open an account. Sometimes people do, and that's kind of what drives their opening the account. But if you know you definitely want to do something, you can just get an account open and ready, and then as soon as you identify that investment, you're going to, of course, do your due diligence because there's risk associated with any. So be comfortable with the investment sponsor or the organization that you're working with. And you want to be sure that you agree to the terms of the investment. But then you're going to direct your custodian, supply paperwork and supporting documentation for that investment. And then the custodian will do a review as well. And they're looking more from an accuracy perspective. Is the IRA listed appropriately on the document? Do they see anything that would not be compliant with IRS guidelines? Because there are some restrictions, rules, and regulations to be aware of when you're using a self-directed IRA. And I won't get into the details of that for today's conversation for the sake of time, but that is something that whatever company you choose should be able to educate you on and provide you the resources to be sure that you understand what limitations may come into play and you're able to work within those limitations. So upon completing that review, the custodian will then process the transaction, as I described earlier, and send those funds out. And then at that point, especially if you're passively investing, there's not really much you have to do but sit back and wait for the money to come back to you. And then, of course, you'll receive statements and you'll get regular reporting and such from the custodian. But essentially, that's the process. It can take anywhere conservatively from 4 to 6 weeks to, if you've never opened a self-directed IRA before, to getting the account open, to getting the funds over, to getting the paperwork completed and reviewed, and getting the transaction processed out. So it is wise to proactively be aware of what to expect in the process and be somewhat educated on these things prior to jumping in, just understanding that there is some lead time. But of course, the more comfortable you are with the process, the faster potentially you can get the investment done. So with that, I'm just going to leave this up for a second. I'm still going to be here in this conversation, but I do want to give Troy a chance to dive in a little bit more on some of the specific investment scenarios and talk a little bit more about his experience with the IRA portion as well. But here are a couple ways to get in touch or access more resources related to self-directed IRAs specifically, and of course, happy to speak to anyone that has questions.
Brittany, thank you very much. I know that there's a lot of rules and regulations that you as custodians have to go through in the disclaimers, but at the end of the day, I think all of our viewers just need to know that there's a lot of custodial choices out there. Some custodians are genuinely driven with customer service, and they're genuinely driven about education and information, and others are all about just accumulating accounts to generate fees. And so with Next Generation, the way you always come across so professional and you're very informative and you know what you're talking about, it's always good to work with organizations that provide that, look, anybody can hold your account, anybody can collect a fee. What are we doing to help you become a better self-directed IRA customer, client, and user of your assets to accumulate wealth and defer those taxes? So, very, very nice presentation. Thank you so much for starting that way. If you'll share a screen back with me, I'll grab it and see if I can load mine up.
Sure.
And, let's see, there we go.
And while you're doing that, you make a good point about service. I just want to mention real quick, if I can, that especially with self-directed IRAs, because for a lot of people, the process is new and it does require more sort of hands-on, right, participation by the account holder. Customer service is critical. So it's not as simple as going to, Fidelity's website and clicking buttons to trade, right? You do actually, when you have a self-directed IRA, you do really have to be involved and be able to speak with a representative and get answers to your questions quickly. So that is something important for everyone to keep in mind when you are looking at your options.
Well, I say self-directed IRA custodians are like a marriage, real easy to get into, one hell of a deal to get out of, because I have now spent close to 5 months trying to move money out of my State Farm account that I've had for 15 or 20 years. And State Farm outsourced all of their custodial rights to something called RBC, which is a huge billion-dollar conglomerate of funds. And I'm going to tell this short story before I get started. It's worth it. So we go through the process. I liquidate the securities. I'm holding it in a money market. I'm working with another custodian trying to get the money moved for a real estate closing that I have. And it's in a money market. And so finally they said, we can't get State Farm to release the funds. So finally I have to go through the call, do it myself. I mean, literally, I'm going through the experience my investors go through. I'm about to pull my hair out and I don't have much hair left. So I was getting kind of nervous. And when I finally got down to it, the person over at the State Farm office through RBC said, oh, well, they asked for cash. You have it in a money market. I go, that's a cash equivalent. No, that's a security. I said, oh, so when you don't have it in a money market, since you're a registered licensed firm, then where would you be holding my cash? Is it in a bucket of dollar bills on the ground, or is you have to hold it in a money market? It's not just in cash. And so the answer was, so it was a delay. So just a long story short, yesterday, I finally got the money received in my custodial account after 5 months. I closed on 2 real estate transactions I was going to do inside of my self-directed IRA. I ended up having to pay cash and buy it outside because I couldn't get the money moved. So the lesson learned here is great tool, great advantages, has a lot of value, which we're going to cover here in a second. But if you're not a proactive user of self-directed IRAs and you don't choose the right custodian, they love to get your money, but it's like trying to pry a toy away from a rhinoceros. You're not going to get it away with very much ease. So yeah, I was about to just literally go through the roof after 5 months, but it was a nightmare. All right, I'm going to go through my slides, and then Brittany and I both have parts of this presentation we want to have just a general dialogue about. We'll do it at the end, but let me just tell everyone how this really works. It's really simple. The IRS does no one any favors. So when there are congressional rules and IRS rules and procedures and policies and tools put in place, they don't do it lighthearted. They do it with the idea of reluctance because they want all the money they can get in form of taxes. So the difference between successful investors and mediocre investors, or really poor investors, is not accessing and not learning about the tools that are in place. Today, we have a really massive changeover in the economy. And what I do for a living is I deal in natural resources, primarily oil and gas, in this case, primarily mineral rights, which are one of the assets that qualify for investing in a self-directed IRA. And the IRS is essentially what they did when they set up self-directed IRAs. The idea and strategy is maybe investors who are sophisticated enough to make high income, have higher net worths, they obviously know what they're doing. Let's maybe give them some tools that let them create a bigger basket of assets. So when they die in the estate planning world, they get 55% of a bigger pie. They also wanted us to invest in our IRAs and our 401ks and our retirement plans, so we won't be drawing down on their Social Security benefits, and we're not going to be another individual that's maybe relying on the system. So let people who are smart create money, save for retirement, and then let's give them some tools so they can kind of compound that. And it's worked incredibly well the last 30 or 40 years. The problem is we have one guy who was so successfully created $5 billion inside of his self-directed IRA. Not his fault that he had great stocks, not his fault he made good choices, but now they use that as a whip. So we're going to go through what I do, how that works in a self-directed IRA, and today's inflationary market, how that might be something you may want to do as far as opening an account with Next Generation and using a self-directed IRA to help you save tax dollars, create wealth, and et cetera. So let's get started, and I'll just, Brittany, if you want to pop your video off, I'll just keep going real quick. All right, so first off, I'm your speaker, Troy W. Eckard. I've been in the business since 1985. I started my career as an investment broker with a small investment firm here in Dallas, Texas. And over the years, I've been very fortunate to have gone through almost 37 years in the cycle of being in energy. And there's nothing that can replace expertise or experience, because as I was told when I was in my 20s, a lot of wealthier, more sophisticated investors said, son, you just don't have enough road scars or experience to tell me how to invest my money. Call me in 10 or 15 years when you lost somebody else's money or you have enough experience. Well, I don't know what that experience is. I've got clients that are 85 and 90. They still tell people in their 50s, you don't have enough experience. And I have investors in their 40s that are saying, well, that's the way they used to do it, Sonny. And today we're millennials and we have a better way and more digital platform. Here's what it really boils down to. You got to have somebody who is focused, who's transparent, and who has decided to become an expert in a particular category. My expertise is in oil and gas and energy rights and mineral rights in the oil and gas sector in the United States. And that's all I've done for almost 37 years. Okay. So one of the things you need to know, and you already know this, but it's going to get worse, is that we're in really one of the highest inflation rate economies we've been in almost 40 years. It's going to get worse. It's hyperinflation. It's hyperinflation combined with stagflation. I said this 2 years ago. You can look at my recordings and my videos and all my reports. I'm not a Nostradamus. I'm not a PhD economist, but I'm not a dummy either. And the signs were all in the stimulus and how much flooded dollars were going to be taking place in the market, how it was going to affect oil and gas, how it was going to affect the consumers and demand and the whole COVID lockdown. To me, it was as obvious as the nose on my face. Unfortunately, 90% of most investors have not really been through significant downturns. Most of the money made in real estate and stock market the last 13 years have never experienced a downturn. So they think everything's going to make 30%. They're in for a rude awakening. And so that's why today, the upper echelon investors, those that are in that top 5 or 10% net worth and income, they've been moving to defensive positions the last 12 to 18 months because they knew inflation was coming. They knew there's going to be a correction in real estate. They knew there was going to be a correction in the stock market, and it hasn't happened yet. But it's coming, and it's coming like a freight train. The question is, are you going to wait till the train arrives, or are you going to make some decisions now? Many of you should be moving money out of your 401k into a self-directed IRA because some of the assets that you need to be in, you can't do in a traditional IRA. You cannot do it. So if you take my experience, 4 and 5 months to move the money, you got 4 or 5 months just to get the capital in your self-directed IRA, maybe on a worst case basis, before you can start making those investment choices and asset class decisions. So 36 years of experience, 4 or 5 down and up cycles in the oil and gas industry. I've been involved in exploration, onshore, offshore. I own pipelines, steel fabrication, been involved in well over 3,000 oil and gas wells. I've invested and drilled in over 4 states for drilling and almost 7 states for mineral rights. And so very, very broad level of expertise. Now, when you look at possible investments, I noticed that in Brittany's slides, she had down the list of all the things you can invest in. One of the things that's never highlighted, and I know this from all the custodians that I deal with, is natural resources and commodities. Why is that? I mean, even cryptocurrency, which has only been around 11 years, now gets on the list, but natural resources and commodities don't. Why is that? Well, let's face it. Oil and gas is one of the toughest markets for investors to get their head around. It's like speaking a different language. There's a lot of unscrupulous characters in oil and gas. Because why? Because it's a different language. You can't look in a book or Wall Street Journal or get public information on most oil and gas companies or ventures because it's like a secret club. So what happens is most investors don't do what they're not familiar with. Most investors are not familiar with self-directed IRAs. Therefore, they don't have an account. I was fortunate. I got introduced to self-directed IRAs back in the 90s when I was in my 20s, and I opened up a self-directed IRA like in 1991, way ahead of my time. I'm probably 100 years old in my soul, but I'm 57 in real life. But one of the things that has happened is natural resources and commodities have been overlooked as an investment class in your self-directed IRA. Now, in the last 3 years, our company has experienced 75% of our investment funding has come from investors who've used their self-directed IRAs because they're aware of real estate investments, they're aware of tangible assets, hardcore commodities, real property like mineral rights. They've recognized, hey, not only is this an investment I can invest in my self-directed IRA, it's also a great cash flowing asset, and it can be an outstanding tool if you're in an inflationary cycle. So as Brittany put on her slides, natural resources and commodities, they perform really, really well in inflation. I got news for everybody. When the diesel prices go up and gasoline prices and labor and steel and all the materials go up in price, it goes up when it costs to drill a well. So the wells that might have cost $8 or $9 million 8 months ago are now running $10, $11, $12 million. We make steel tanks for the oil and gas industry. We were selling tanks 2 years ago for $8,500. Now those tanks, if you can find them, are $15,000 to $20,000 a tank. That all goes to the cost of drilling, which means the oil companies need much higher oil and gas prices to justify drilling new wells. So it's kind of this push-pull. We're going to see inflation, but inflation begets inflation. And what ends up happening is it's this super cycle or this raging inflation that we have to defend against. Everyone should know the greatest deterioration to your wealth and your income is taxes in any form. Property taxes, sales tax, state tax, federal income tax. So you have one obligation to yourself and one obligation to your family. Get in investments that defer, delay, or remove taxes in any form or fashion, because that's the fastest and the biggest hole in your net worth is taxes. All right. So self-directed IRAs, they do a lot of things for you. Now, keep in mind, as you become a higher income earner, higher net worth individual, you're trying to defer those taxes. You can do that inside a self-directed IRA because it effectively has the IRS code that says you don't pay taxes until time of withdrawal. No capital gains are paid inside. So you can buy and sell inside of your self-directed IRA, and you're not going to pay those taxes. It's deferred. It's deferred. It's deferred. They hope you take $1 million and turn it into $20 million. The IRS thinks I'll get our money on the back end. Okay. So they're letting smart people like us use our IRAs to compound the amount and the total investment capital we have inside that IRA. And one day the IRS says we'll get our money when you start to exit. That's true. But what we have to do is plan. That means opening that self-directed IRA today. The other thing is self-directed IRAs provides liability protection. Now, let me tell you why that's important. You drive a Mercedes-Benz down the street, you hit somebody in a Kia. First thing they're going to think is, that's a rich guy. He hit my little car. He's got better insurance. I'm going to say it's his fault. Now I feel like my neck is starting to hurt. I'm being exaggeratory, but I think the point is the fact that when you have assets and you have money, when you're broke, I don't care who I hit. I don't care who hits me. I don't have any money. They can't get anything out of me anyway. When you start having a net worth and you have homes and property and real estate and businesses, you are a target for litigation attorneys. Whatever capital you put inside your self-directed IRA or any retirement account is protected against creditors and liability like that. It's a very important tool, and you need to think about that as a contributing factor why moving as much money into and managing your self-directed IRAs is as important as it is. That's what I do, and I think you should follow the same advice. It is a great way to get freedom. Freedom means what? I don't like calling Fidelity and some of these normal traditional securities clearinghouse and I say, hey, I want to invest in mineral rights. Oh, we don't do that. We don't handle that. Why not? That's just not an asset we manage. Okay, so all you big houses collect billions upon billions of dollars, and then you tell me as an investor I can't invest in real estate, I can't invest in mineral rights, can't invest in cryptocurrency, all these classified assets that belong in self-directed IRAs. The big boys don't want it. Why? Too much paperwork. They just want the easy stuff. They want the low-hanging fruit. So you have to be a proactive investor, set up that self-directed IRA with Next Generation, open the account, and then you can buy the assets, not only that they offer, you can now buy the assets that were defined in Brittany's slide, which is cryptocurrency, real estate, et cetera, and mineral rights, okay? So it gives you the chance to really build your own asset selection. That freedom is really important. Well, what the heck are mineral rights? First off, it's simple. Mineral rights have to do with natural resources, anything below the surface. Mineral rights are just like a piece of property, just like the surface. You went and bought a residential lot or a self-storage building or an apartment complex. It's real property. It's deeded and entitled. Mineral rights are the same thing. The only difference is you're buying everything from the surface and below. So I could have a rancher with 300 acres and he decides to sell his mineral rights for the 300 acres below the ground. He keeps his ranch, keeps his farm, keeps his property. He has sold the rights to the minerals to somebody else, doesn't change his life, but he's created a monetary event that allows him to get value for mineral rights that he doesn't believe are worthwhile, or maybe he is uneducated, or maybe he simply needs the money because he's buying his neighbor's farm or ranch. There's 1,000 reasons or more why somebody sells mineral rights, but it's real property. When you own a mineral right, you are 100% owner of the natural resources below the ground. You're simply going to lease those rights to an oil and gas company. I'm talking oil and gas mineral rights. You're going to lease those mineral rights to an oil and gas company. They're going to take on 100% of all future liability, drilling, environmental, liability, expenses, capital costs. You're going to give them the lease. They're going to pay you for it, and they're going to assume 100% of all future liability. What do you get? I get my lease payment, and I also get a percentage of all future revenue. I get the highest, most clear passive income generating asset class that there is. I get 12.5 to 25% of all future revenue from every drop of oil and every molecule of gas that lessee, that oil company, pulls out from underneath the minerals that I own. All I get is a check every month. I get 12 distributions and one 1099 a year. Now, in the case of a self-directed IRA, I don't even get a 1099 because I don't owe taxes on it. I'm just going to continue to compound the value. So why mineral rights are so good is, one, it's oil and gas. It's a great hedge against inflation. Number two, it is a continual cash flow. Some of these wells will last 25 to 50 years. Number three, by owning it in my self-directed IRA, I defer the tax liability and I let myself continue to compound my return, which gives me a much higher rate of return, or IRR, because I'm using tax dollars to continue to buy more mineral rights instead of paying it to the federal government. Mineral rights are paid out monthly. You get a check every month that goes to your self-directed IRA that owns that mineral right because it's in your classified account. You hold them forever in perpetuity because it is real property. It is truly a wealth generational asset. One of the things about your IRA is the monthly cash flow gets distributed, which allows your account to rebuild and replenish itself over time, allowing you to buy more and more mineral rights. And because it doesn't have any expenses or cost or operations, you're not having a rent house where you're having to pay for landscaping or roofing repairs or tenant improvements. It is a net cash flowing asset that goes straight into your account with nothing but revenue, no expenses, no capital costs. So it gives you tax deferral. It allows you to have those assets to grow, to be able to continue to increase those beneficiaries, estate planning, net worth kind of scenarios when you transfer that wealth. All right, let's talk about what's going on. I'm going to whiz through these slides because most of them are pictures anyway. But look, the U.S. is saturated with oil and gas. Through the discovery of horizontal drilling and shale fracking, we now have 30 states in the country that are absolutely loaded with oil and gas. Everything you see in pink on this slide was not considered financially or economically or even operationally viable for pulling oil and gas out 15 years ago. Because of using computers and software and advanced methodologies in extraction, we now have an ocean of oil and gas across the U.S., and that's why the United States has become the #1 crude oil producer in less than 14 years. Why? We knew it was there. We knew it was saturated. We knew there was tons of oil and gas in place from geology and geophysics. We just didn't know how to get it out. The tools became available, and these really smart engineers with advanced technology like computers and software and triangulation using satellites. Now we drill spot on wells, 2-3 miles in horizontal distance. We stimulate it with sand and water, and that allows it to come up in large commercial quantities. Now what you have is you have essentially 30 states and probably 100 million mineral acres that now can be bought and sold that wasn't available 14 years ago. It's a brand new market with about a $500 billion market potential as far as investment. Brand new, okay? So what I can tell you is that, look, the values generally below the ground can be much greater than what's above the ground. If you go to Oklahoma, where we buy mineral rights, you can buy surface rights for $2,000 or $3,000 an acre. But for the mineral rights, you're going to pay $10,000 to $15,000 to $25,000 an acre because the oil and gas reserves the ground, below the ground, are worth a whole lot more than that cow or that hay field or that pasture above the ground. All right. Simply put, the U.S. is saturated. We like to focus on Oklahoma because we think it's the best basin. Doesn't mean we're right. Doesn't mean it's the only place to buy minerals. We're simply showing you how, just like in real estate, you find a market, you decide what those economic parameters are, you build your financial model, and then you make decisions. Do you want to invest in energy and oil and gas mineral rights? Does it fit your self-directed IRA? Does it fit your particular strategy on creating wealth and deferring taxes? So that's why you do it. And it is in an area that you believe with confidence. So just from visual standpoint, all these big basins across the United States, those pink blobs I showed you on the previous map, all they represent is buried Grand Canyons sitting below the earth, 4,000 to 10,000 feet deep. They were created millions of years ago, and then they were filled in with dead plants and animals and additional rock formation over time, and they cooked like a boiling pot of rice. The magma in the center of the earth cooks it all. It begins to percolate. It gets trapped in place. It becomes oil and gas in place. And we finally drill a hole through it, and we provide a frac stimulation. It frees up those oil and gas molecules and allows us to have enormous amounts of oil and gas that can be produced to run the energy and the economy for the United States. This is what it looks like. It's an underground plumbing system, just like if you were to build a 10-story building above ground. Below the ground, these oil companies are drilling horizontal wells 2 miles out. No different than going to a 100-acre or 500-acre new development on the north side of any big town, and they come in and they cut roads and they cut plumbing and utilities and sewage lines, and they go in and put 5-story buildings and shopping centers and big box retail. We're doing the same thing. We're just doing it out of sight. It all happens underneath the ground. So from an environmental standpoint, it's incredibly environmentally safe. It's incredibly minimal as far as impact to the surface. And that's why this has become such a fantastic tool, and why mineral rights make such a great investment is it's profitable, it's cash flow, and it's very environmental friendly. This is what it looks like. Single pad site, 4 wells drilling. We have pump jacks taking up about a half an acre. We have tanks sitting on about a half an acre. And every month we send out green envelopes with checks, just checks. We never send bills. Once you write a check out of your self-directed IRA, or you fund it with your self-directed IRA, there's no more expenses that you'll have to worry about. Big billion-dollar oil companies, the ones that are leasing these minerals, they're the only ones who can afford to drill them. So you've got Exxon and Marathon and Chevron and Oventive and Continental. These are major billion-dollar publicly traded companies, private equity groups that have come out and said, look, for us to drill the wells necessary to fuel the economy of the United States, we've got to have several billion dollars to be able to deploy. Well, what better investment for you and I in our self-directed IRA with Next Generation than have a piece of real estate that's deeded and titled with no liability, and 12.5 to 25% of all the future income from every drop of oil, every molecule of gas. We get it back into our self-directed IRA. We don't pay taxes on it. And we got billion-dollar lessees that are managing those assets who've literally put up almost 100% of all the money to drill those wells. We're in the best driver's seat we've ever been in. So look, oil and gas is all about commodity prices, technology, market conditions, and the type of formation you're drilling in. This is all part of what Eckard brings to the equation. This is our 37 years of expertise. Look, I like investments. I'm not getting lazy, but I'll be 58 this summer. I find myself taking the elevator instead of the stairs sometimes. I find myself not water skiing because it's better to sit on the shore in a chair and watch my grandkids ski. I look at it this way. I want net income generating assets. I don't want the liability. I don't want capital costs. I don't want to put in new hot water heaters and replace carpet and stores. I don't want to be in partnerships where the managing partner makes all the fees and maybe waters down my asset. I want to be in a direct owned asset class that's 100% passive and cash flowing, which is mineral rights. And I want to do it in my self-directed IRA because I don't want to pay the taxes on the income. I just want that account to grow. So when I decide to withdraw, it's the highest value there possibly is. So mineral rights, passive income, cash flow, take no risk. It's exactly where I want to be. These wells will generate 25 to 50 years worth of cash flow. Every single month I get a revenue check. Eckard believes in 3 things. Aggregation, find a fragmented market, go in and aggregate. That's what we do. We let assets mature. Whether you plant a brand new orange grove or you start to build a brand new 24-unit apartment complex, you got to start with the point of aggregating the assets you want. You got to let them mature. And then you may consider liquidation. The problem with liquidating outside your self-directed IRA, now you got to factor in with the taxes at the capital gains percentages at that time, or whether it's ordinary income tax. You got to figure out what the taxes do. Inside a self-directed IRA, liquidation becomes that much easier because I'm not worried about the tax implication when I decide to liquidate. In our case, Eckard, over the last 3 years, we now have bought enough minerals. We have 700 employees producing income for us 24/7 a day, 365 days a year. What is that? We now have over 700 oil and gas wells in Oklahoma generating oil and gas revenues from our royalty income as mineral owners, and is doing it every single hour, every single day of every single year, producing money for us without any cost or expenses. It's a beautiful kind of employee status to have, I think. All right, so what we want, what do we all want? We want to have safety of principle. We want long-term cash flow. We want to have low to no taxes. We want hands-off, completely passive. I want to go sit on the beach and relax. I don't want to worry about somebody calling me, telling me my roof got ripped off by a tornado or an ice storm. I don't want any liabilities. I don't want somebody telling me I owe them money or I have a problem or somebody's trying to come after me. I want to know I can sit back in my self-directed IRA, let these mineral rights and let these assets do their job. And again, I just want income and growth part of it. This is me. I just want to take my time, go to a beach, climb the mountains, and just relax knowing that I have assets in my self-directed IRA growing and compounding. How do you get started? Simple. You contact me at Eckard at Eckard Enterprises. You can call our 800 number. It's always available. I would like this last 10 minutes to be a dialogue between Brittany and myself because she had some great questions. We have some great topics, and I want to get to that. So I'm going to drop the share screen so it allows us to show our wonderful faces, and that way we can communicate. I went faster than normal. It is recorded, but here's the thing. There's a lot of details when you open a self-directed IRA, and there's a lot of great attributes in Next Generation. This is why you're going to contact Brittany. You're going to call her and say, hey, I want to talk about a Roth conversion. I want to talk about a check writing. I want to talk about the different characteristics in each IRA and self-directed IRA and what I can do. Most of you don't ask the questions because you don't take the time, or maybe you feel, well, I should know this. I don't want to be embarrassed. Look, there's no embarrassment. The embarrassment is failure to take action. The embarrassment is allowing the tsunami to come, allowing yourself not to be in position to take advantage of what you're doing. Look at me, 5 months to get my money moved. That's ridiculous. I missed 2 real estate transactions. And the only thing that happened is they just simply delayed it because they weren't a good custodian. You got to find somebody to work with you, enjoy, that has customer service, and they have great education and information based on facts. So let's get started, Brittany. So we talk about right now where we're at in the economy. We talk about self-directed IRAs. There's 2 key things we all have to be aware of. Taxes are going to go up. I don't care who's in the White House. We got $20 trillion to pay off. It's scary. So they're going to tax us like crazy the next 10 years at all levels. Whatever you can do is going to be beneficial. But having commodities like mineral rights and oil and gas provides you an extra compounding fact inside your self-directed IRA. What's your thoughts on that, Brittany?
Yeah, well, I agree. I think, another play on the self-directed IRA is a lot of people, we talk about diversification, right?
Yeah.
But in the traditional sense, we're just talking about how much exposure to equities versus, bonds or whatever we're going to have. But then there's this whole other sphere of diversifying beyond that, right? So even if we're diversified within the public markets, they're going to ebb and flow the way that they ebb and flow in general. But what we see with alternative assets, and especially those like natural resources and what you talked about, is that they tend to be not correlated with the fluctuations of the other markets. So diversifying beyond even traditional asset types can provide additional hedge. So I think some of the other benefits here is that passive nature of investing, right? Like you said, like I personally learn a lot every time I listen to you guys, share this information about, oil, gas, and mineral rates, but I don't necessarily have the time, nor do I want to, no offense,
Yeah, right.
to research on all of this and understand every detail in terms of what it takes to manage these types of investments. But understanding the value and looking at it and being able to, deploy my funds somewhere where I can kind of step back and somebody else is managing that at that level, I see value in that.
It's kind of like cryptocurrency. If you took 100 people that say they currently own some type of cryptocurrency, 99 could not explain to you what they own. Mm-hmm. They don't know where it is, what it is, how it works, why it goes up and down, how it's going to be marketed. They have no clue. I mean, I'm in Bitcoin. I like Bitcoin. I've been buying it for about 1.5 years. I generally think I get the concept and where it's going. I'm finding some patterns in it. But when you have a mining operation, you don't know where it's located. You have people getting paid. You don't know how they're getting paid. You have fees you pay for every transaction. You don't know who started it. You don't know where it's at. It's in the cloud. It's in the space. There's nothing physical at all about a cryptocurrency investment. But you look at the market share of that. I don't even know what it's at these days. It's several $1 trillion in cryptocurrency. And you're thinking, this evolved from thin air like 12 years ago. So now you go to something, what I always call, they call it staple products, staple investments. My theory has always been, if you can't see, touch, or kick it, I got a problem with it. Peter Lynch back with Fidelity Mutual Funds back in the 80s had the most simple statement. He was one of the most successful mutual fund managers out there. He said, look, if I can't draw it with a crayon, it's too complex. That doesn't apply today because now we're in a much more digital world. So you've got things like software and hardware. But his point is well taken, which is at the end of the day, if you can't make common sense of how that investment will make it through several investment market cycles like an inflation, recession, et cetera, you're taking a lot higher risk. And then if you don't use something like a self-directed IRA to at least capsulize that, where at least it cuts out the tax component, you're taking a double risk. And I can tell you right now, all inflation it's just a hidden tax. And the truth of the matter is that the seating party has to have runaway inflation and runaway taxes to pay off this deficit. Inflation allows the $5 trillion that we've spent the last 2 years to go away. If I owe you, Brittany, $1 trillion and I don't have the money, I'll inflate the dollar by 400%. And I go back, oh, here's your $1 trillion. You go, well, you didn't give me $1 trillion because your trillion is only worth 20% of what it was when you started borrowing the money. That's not what the contract says. The contract says I got to give you $1 trillion. So the fastest way for this country to get out of debt is inflation. So if any of you think we're going to come out of inflation anytime soon, you're crazy. There's no incentive for any political party to not have inflation to pay off our foreign borrowers or lenders. We borrowed from the last 2 years. They got to have runaway inflation. We're in this cycle for at least 3 to 5 years. I got to just look back at the late 70s and early 80s. So there was a question that popped up. I want to make sure we get that. And it says, what costs and fees are associated with self-directed IRA? Well, that is a conversation that Brittany will have, but I'll tell you when I turn it over to her. Here's the thing. Everybody has their own fee structure. You'll have to decide what fits you best. It can be a flat fee, percentage, et cetera. But what I will tell you is a lot of investors get caught up on fees. Not a bad thing, but it can be a horrible thing. Here's why. I take a look at the taxes I don't pay inside of my self-directed IRA, and I compare it to the small fees I pay somebody like Next Generation, and there's not even a comparison. It's like I don't want to put a penny in to save $1,000 because I could have got it for a half a penny. That's your choice. I find my time to be worth X number of dollars per working hour. I will probably spend more time hunting 5 different custodians to save $100, and I probably spent $10,000 of my time. Brittany, why don't you handle it from your perspective on the fees for Next Generation? That kind of an answer for you. But I thought
what I can say
first.
What I can say structurally is typically you would expect to pay a minimal account opening fee. And then mainly a custodial fee, which every company is going to probably charge in one form or another. Like Troy said, there are probably going to be options you'll have to choose from, and we offer options as well. And happy to talk through that with anyone to determine which option is more cost effective, because it's going to depend on how many things you're investing in, how much you're moving in and funding. But that custodial fee is going to be the primary fee that's going to apply to every account. And that's going to cover the custodian's tax reporting, record keeping, all of the kind of basic obligations that they have to maintain that IRA, sending statements, that sort of thing as well. And then more of the variable fees would be like your transaction fees. So depending on how many investments you're making or how many actual transactions in terms of moving funds in and out of the account back and forth, and how you're doing those transactions, right? Are you sending a check? Are you wiring funds? So it's all going to vary a bit with your account activity. But generally, if you're investing passively, and what I mean by that is like kind of talking about what Troy talked about today, where you're essentially just sending funds out, right? And then you're just kind of collecting money. You're kind of just sitting back, and maybe you're even sipping a cocktail while you're waiting for that to come back. But you're not actively managing something like, for example, if you bought a rental property in your IRA, you've got to, you're paying contractors, you're paying property taxes, you're paying utilities. That's more of an active type of investment. And in an IRA where maybe you'd be incurring some more transactional fees, but something passive, you're not going to see much of that. So every fee schedule is different, but going back to Troy, you made a good point about, I think it comes back to for a lot of people mindset when they're thinking about the fees, because there are a couple of things to remember. So if we are expecting the fees to look like they do when we're investing at Fidelity, then we're already setting ourselves up for disappointment, because for one, this is a completely different business model. So like Troy said, again, there's a lot of, there's more paperwork involved, and that's because the benefit of being able to invest in so many different types of things that are unique and different also means that because they're unique and different, we're going to have to look at the paperwork for each investment, because as long as I've been with the company, every day something new and interesting comes that I've never seen before. That's the beauty of being able to be a little bit more creative. But then, of course, some partial trade-off is that there's more manual sort of effort in terms of eyes on reviewing everything and making sure that it's compliant with IRS guidelines, so to speak. So remember that when you're shopping, if you are shopping custodians, because just recognize that the fees reflect the amount of work that's being done and, the level of service as well that you're going to receive. So we talked before about how critical it is to have good customer service if you want to be as fully educated as possible, be as successful as possible using a self-directed IRA. And so if you're just going for the lowest price and you're just budget shopping, then you're just going to get what you pay for. So just setting expectations is important when getting into that.
And I'll let the viewing audience know too, from the sponsor side, somebody who deals with investors who are utilizing their self-directed IRAs, a lot of our clients find themselves missing out. They'll invest in a portfolio of minerals. They'll try to get hold of their self-directed IRA. Custodian won't cooperate, won't move the monies. We have to ask them to step out of that project, go to the next one, kind of like my 2 real estate transactions. I fully planned on funding them with my IRA, couldn't do it, paid cash, frustrated. So what ends up happening is it's a 2-part decision. One, do you want to be in a self-directed IRA because you like the asset classes you can invest in with a traditional? That's number one. If you're just happy with public security, stay where you're at. But from a self-directed perspective, it's kind of like hiring a driver. Do I want a driver who says, yeah, I'll charge you $5 an hour, but I got 9 DWIs and 42 tickets. And by the way, don't ask me any questions because I don't know what I'm doing. I just arrived into town. That's what I call a low cost, low fee, self-directed IRA custodian, where put your money up, shut up, don't ask us to do a whole lot. It'll take us a long time to get you what you want, but we're going to give you what you want, which is a self-directed IRA. I've got several custodians that my company, my staff works with that are phenomenal at customer service, and they stay on point to work between the sponsor, the place you're investing, and the place that has your money now, connecting that to get the money in your self-directed IRA and get the execution of the contract. But you've got to have somebody like Next Generation that follows the IRS rules, make sure you're in compliance, make sure the paperwork's right, make sure the asset qualifies, because at the end of the day, their expertise keeps you in the good space with the IRS, make sure your assets are where they're supposed to be and you don't violate any IRS code. So it's really, really important that you remember that as it's the underlying work they do and the expertise they have. You never can see it, can't be quantified. So it's really important. I know we're running out of time. I know that every time that we're talking, Brittany brings a tremendous amount of value and professionalism with what she does for a living with the self-directed IRA and the custodians. She's got all kinds of products and sponsors she talks to all the time. We need to do this more often because I think, quite frankly, you and I click very well on getting down to brass tacks. I'll just leave my comment and I'll let Brittany wrap it up. But I'll just tell you where I think, folks, we've got some real challenges ahead of us. Now, I like challenges. Challenges means opportunity. I'm an eternal optimist. If I fell in the bottom of a water well, first thing I'm going to think is, well, I'm not going to go thirsty. Second thing is, nobody's going to ask me to help them because I'm in a hole. I'm busy right now. I'm not going to get a sunburn. So after I get through my 5 or 6 positives, then I'm going to think, now I got to figure out how maybe to get to the surface just so I can see what the sun does look like. So in today's economy, we got all kinds of concerns, but we do have a given thing, which is the freedom of choice. So today, you need to get moving to get your money in defensive assets that will benefit from inflation, put them in asset holdings like self-directed IRAs with Next Generation that's going to give you that chance to hold that capital, grow it without paying taxes. You need to get moving because every day you delay is one more day. The storm's getting closer and closer. And when it arrives, it's too late. So I'm Troy Eckard with Eckard Enterprises. Brittany, why don't you close us out?
Sure. I actually just wanted to comment on something you said a few minutes ago, which was about not being afraid to ask questions and to learn about this and to don't judge yourself so much, I guess I would say, because even some of the most sophisticated investors that have been doing, managing hedge funds for decades, we'd have a conversation and they don't know anything about self-directed IRAs. And that doesn't mean that they're not intelligent. It doesn't mean that they can't be successful, but they've just never come across this. And I would just encourage everyone to just keep an open mind and not be afraid to ask questions. And like Troy said, see it as an opportunity to learn something, even if you determine it's not right for you. At least you know it's a strategy that's out there, and if situations change in the future, that you're fully informed and you're educated enough to feel good about making whatever choices you think are best for you. So I'll leave it there.
Absolutely. Well, on behalf of Eckard Enterprises and on Next Generation, Brittany, thank you so much for your time today. We'll have this recording out as soon as possible. That way you can share it with your friends. If you need to open up a self-directed IRA, if you decide that maybe Eckard Investments is the right place for you, if you open an account with Next Generation in 2022 with an investment in Eckard Land and Acquisition, the minerals we do, we'll pay for your cost of your IRA and the setup fees going through Next Generation. We'll pay that cost for you this year because what we want to do is encourage you to make good decisions. And if we happen to be the partner you want to dance with, we'll cover those costs with Next Generation. You'll fund with Next Generation. You'll send us a copy of your invoice or bill. We'll cover that cost up to $500 for your initial account and opening it with Next Generation. So thanks again, Brittany. You have a great week, and we look forward to seeing you next time.
Always good to see you, Troy. Thanks, everyone, for your time and attention today.
Okay, everyone, take care. Thank you so much.